So welcome to Series 3, Episode 9 of the OR Talks podcast. Today we'll be discussing the budget and how that affects businesses, and we're joined by one special guest. Here are your hosts, Neil Seeger
and Marc.
Welcome to Yoi Season 3, Episode 9 of the OR Talks podcast.
So thanks for joining us. We're here with Martin, and Martin has a special guest.
Yeah.
Special guest just about cut it, I think. So, let you introduce yourself, Martin.
So I'm associate partner at Ormond Rutter. Obviously, I do a lot of work with clients, with tax, things like that. So, the budget has quite a big impact on it, which I'm guessing is why you've asked me here today.
Well, I sort of hoping you might have a bit of an idea how it affects business and that sort of stuff.
Try my best.
Fingers crossed, we'll see how we go. So Marc, can you name anything that changed?
One of the things that comes to my mind straight away was the employer's national insurance contribution. So what sort of change, Martin, and how's it going to affect people?
Yeah, so it's something I've looked at with a few clients already, done a few forecasts and things, and you tend to find if you've got a handful of employees, it probably won't be that big of a difference.
Yeah.
But for businesses who are employing lots of people, it's quite a significant change, really. So obviously the rate's gone up. The point at which you start paying it's gone down.
Yeah.
So although they've increased the employment allowance to offset that for the smallest employers, any business where you're employing lots of staff, you've got big wage costs. It's going to be a huge impact.
So when we say that, we mean the rate's gone up so the percentage you pay as employers national insurance has gone from 13.8 to 15%.
15%.
So that's 1.2%.
Yes.
Good math.
Yeah.
I should be an accountant, you're not. So that's the rate that I pay.
Yeah.
So if I've got employees, I used to start paying that at
9,100.
9,100, and now I'm starting paying it at 5,000.
Yeah.
So I started paying it effectively £4,100 earlier.
Yeah.
So that's 1.2% on 4,000.
Yeah.
4,100. Yeah. Right. So then to compensate that, so for small employers, we had a thing called employment allowance. So that's an amount that we have. How does that work? What's that?
So that's like the tax-free allowance. So a bit like an individual has a personal allowance. That's like the allowance for employers on their national insurance, basically.
That's it.
And that's moved from 5,000
to
10,500.
Yeah.
So you start paying it earlier, but you have more of an allowance against it. So then if you've got, sorry, I don't know, it depends on payroll, doesn't it? But if you've got a really small payroll, it might not hit you as hard as if you've got a big payroll.
That's it. So I looked at an example with a client who had 5 employees, and actually they were 50 quid different over the course of a year because the figures worked out for that.
But it depends on the salary, I suppose.
Yeah, that's it.
If you've got 5 employees on £100,000 each, that's different to having an awful lot.
That's it.
Employees.
And also as well, if you've got a lot of people on 0 hours contracts who might still be below the 5,000, again, it might not have a big impact.
So you could have 1,000 employees all earning 5,000 or less, and they, okay.
That's it. But the ones who do have a lot of staff and they're, full-time employees earning over and above that, it's certainly quite a big increase. So the clients we spoke to so far, I know certainly there's a few people who've changed decisions on taking on more staff and that kind of thing.
Well, that's the one thing that it's going to affect, isn't it? That's it, because you start looking actually your amount it costs you, whatever the salary is, plus the pension, plus now the increase in national insurance. It's actually makes a big difference to the overall cost of a business.
Yeah, and I suppose it'll impact people looking at giving pay rises to employees as well, because that's going to be an added cost now to what they would have had before.
That's it. I mean, obviously it's coming in, at the same time as well as national wage increase as well. So people are already going to be paying. Well, employers are already going to be paying more, but now it's extra on top of that as well.
More.
Yeah, more.
It's more.
Technical terms.
On the technical terms, obviously people that listen to this know that I'm the one for technical terms. They're not always accurate, but they're technical terms.
The one thing I'm getting from this, Neil.
What's that?
All on a case by case scenario, isn't it?
It is a case by case. And it also links into your famous words.
To prepare for it.
Prepares. Yeah. So you prepare, put your prices up, put your budgets in place, so that because that comes into effect when? So it comes into effect April next,
Yeah, 6th of April next year. Yeah.
April, yeah. So we've got a bit of a window to be able to prepare for that.
Yeah. And just to be clear, this is a cost for the employers, not as an individual employee. Employees hasn't changed. It's just employers.
That's it.
The only thing that's changed for employees has been a wages gone up.
Yeah.
So that's good.
Yeah.
That's good for employees. Bad for employers, but you know, so it's like, well, it's not so bad if you can pass it on, but that's the thing, isn't it? It's then
that's it. Yeah.
very interesting change. I think it will be next year based on that.
Yeah.
Yeah. So that was probably the big thing for businesses in the budget, wasn't it? Really.
Yeah.
On an individual side, probably the capital gains taxes, isn't it? Is that?
Yeah, so I think certainly capital gains tax and inheritance tax are the two big changes.
Yeah.
I think capital gains tax actually, from what the expectations were, a lot of people were talking about rates aligning with income tax, which thankfully they didn't. So it's possibly not as bad as some feared. Or completely scrapping business asset disposal relief. So, you know, if you're selling a business, that allows you to pay a lower rate of tax, and that's still in place.
Yeah, so on that business asset disposal relief, they have changed them a little bit, haven't they? There was talk of them getting rid of the lifetime allowance, but that's stuck at 1 million. But the rates are going up. So at the moment, it's 10%. April 25, it's going up to 14. And then April 26 up to 18%. So it's going to be in line with the lower rate capital gains tax.
And that's selling a business. So if I had Neil Limited, and Neil Limited was worth £500,000. Overstating myself, obviously. It's worth £500,000, and I sold Neil Limited to Mark. Congratulations! Congratulations! So you've now got this lovely business. So and then when on that, so the amount of money, that £500,000 that I receive in the current rules, I'd pay 10%.
Yeah.
In the new rules, I'd pay tax on that at 14%.
Yeah.
Depending on when you sell it.
Yeah. So it depends on the sale. After April 25. Yeah. Sorry. Yeah. So then, and then obviously there's things that they're thinking about to increase that in the future, isn't there?
Yes, April 26 is going up to 18%. So.
Oh, okay. So then that affects when I might sell. I might try and sell soon.
Yeah.
Not you want to buy that? But it gives you. So that's the idea. So that's more based on selling businesses, like shares in businesses.
Yeah.
That's what business assets.
So if you've got a trading business, so it won't work on property investment or anything like that, but trading business. And I guess in terms of what we sort of see with clients, there were a lot who tried to rush through business sales before the 30th of October.
Yeah.
And actually, in hindsight, you know, possibly.
Well, yeah. Well, the normal rates of capital gains tax did go up from the 30th of October as well, didn't they, from the budget day? So whereas it was 10 and 20%, they've gone up to 18% and 24%. So it's brought it in line with what it was for residential properties.
Yes.
So in some ways, it might be if they were going to go over their lifetime allowance about that.
Yeah.
So it doesn't matter what you're selling now, whether it's a property or whether it's a painting or whether it's whatever. Actually, you end up paying your same percentage.
Yeah.
So you pay your 18 and 24% capital gains tax.
Yeah. Unless you apply for the relief.
Unless you apply for the relief. So the relief being
business tax.
So your business tax exposure relief, which is my shares. So I pay a lower percentage on that.
Up to $1 million.
Up to $1 million. So my lifetime allowance. So therefore, if I've sold my business, Neil Limited, for $500,000, and then next year I've done really well, I've built my next business up, and I've sold that for 1.5 million. Right, so my total is now 2 million. I'd end up having my lifetime allowance of $1 million, which is my 14%.
Yeah,
anything above that is just a normal capital gains tax rate.
That's it. Yeah.
I understand now. Yeah. So I have to make it simple because I can't understand this complicated stuff. I have to make it simple. So I think that sort of is the main change in capital gains tax.
Yes.
Yeah.
So then inheritance tax wise, it's quite a big one, isn't it? Everyone's probably seen in the news already. But
So lots of farmers unhappy and also lots of business owners unhappy. So it's an interesting one. We're going to have to wait to see, you know, when it comes in. They've announced they're going to obviously change the tax. So it's the relief that was there is now capped at £1 million.
Yeah.
And then over and above that, you pay 50% of the normal rate of inheritance tax. But obviously we don't know the specifics of that yet, so we're waiting for legislation. So
I can't ask any questions then, can I?
Well,
I'm still waiting for my answers.
Yeah, so it's difficult to plan around because until you know the specifics, you don't know what you might be putting something in place that isn't needed.
Yeah. especially with all the backlash that it's had as well. There'll be bound to be things that they're changing it before it actually all goes through. But
And they haven't given us an idea of when that's going to be, have they? They've just said it's watch this space, really, haven't they?
Well, I think by 6th of April next year is when it's meant to happen. But obviously, if there's a U-turn, if there's changes, we don't know that yet, unfortunately.
Yeah, so at least we're talking about business property relief and agriculture property relief, aren't we?
Yeah.
So whereas at the moment, if you had assets that qualify for those, you get 100% relief from inheritance tax. And what they're planning to do is bring in £1 million lifetime allowance, which is combined for both reliefs as well. So
so business asset, like BPR, so business asset property relief.
Yeah.
So that would have been in relation to what sort of things would qualify for that?
Nil limited again.
Nil limited. So if I didn't sell it, and I kept my £500,000 nil limited, and I kept it in my name, and then I passed the shares on to my son, so he had now nil limited.
Yeah.
That would be not encountered as part of my estate for inheritance tax.
It'd be covered by the relief. Yeah.
Right. Okay. But that's what they're looking to change.
Yes.
Yeah.
Right.
Exactly
So then it becomes part of my estate.
Anything over £1 million, you'll then only get 50% relief on it rather than 100%. So.
I understand.
So your estate now has to pay inheritance tax on that.
Neil Limited can afford it. Neil Limited's worth like 12 million and stuff. Yeah, absolutely. Yeah, I've built it up. I've done my bit.
Yeah. But I guess the worry with this that we're hearing quite a lot with clients is actually it's a worry of how that inheritance tax would be funded.
Yeah.
Because not every business is necessarily cash rich.
Be asset rich.
Yeah, exactly. And even then, you've got to extract the cash to pay the inheritance tax,
and that's especially the case with farming businesses normally, isn't it?
Exactly, yeah. And obviously, the other thing with farming businesses as well is a lot of time they'll have quite a high value on their land based on what a developer might pay. But if they were to try and pass that to the next generation for their son or whoever to farm, the value they can get from farming it probably wouldn't equate to what the inheritance tax is based on. So.
Yeah, there's a lot of things to consider with it, but we've got to wait for more detail before we can do too much planning on it.
That's it, yeah. So although there's, you need to start having the thought process, we're sort of for the best part advising clients not to actually go ahead and do anything just yet.
Yeah, don't panic. But
don't panic, That's the thing though, isn't it? As soon as you hear that, you do start to panic, don't you? I've just seen it on other news.
Yeah.
Everyone's been the same, haven't they? And you go into because what can you do to plan against it? Well, nothing. At the moment, but actually that's in the legislation. So at some point it's going to be something we need to plan for, but we haven't got time to plan for it because the window's getting smaller and smaller. Yeah. It's an absolute nightmare. Yeah,
but also as well, as I said, if they do backtrack on something they've announced, you never know.
Well, then you could have done that lovely proactive work.
Which could cost you something in the short term.
Yeah, absolutely.
Yeah, which you might not have needed to do. So it's very difficult.
And the thing that makes it more challenging as well is if there is another change in government or whatever, there's nothing to say that even if the changes do go ahead, that they won't then be reversed further down the line. So it's lots of uncertainty.
Perfect. I'm glad I tuned in for this.
Yeah. So the other thing on inheritance tax is pensions, isn't it? So they're going to be brought into the scope of inheritance tax, whereas previously they've been a really tax efficient investment in pensions for both lifetime and inheritance tax wise. They fell outside, but
that's it. Yeah. So with a lot of cases, if it was written in trust, which a lot of pensions were, it wasn't subject to inheritance tax.
Yeah.
So, again, for a lot of people and a lot of estates, that's going to have quite a significant impact.
And so with that, there's no relief. It's just effectively now it's just counted as part of my estate value.
Yeah, so you've still got your rate bands. So
your 325.
Yeah, that's
325. So me and Mart. So congratulations, Mart, we're together. For me and you, as individuals, we have our 325s.
Yeah.
As a couple, we have 650.
Yeah,
so that's what we're talking about. We're talking about our reliefs.
Yeah.
Sorry, our allowances.
That's it. Yeah. So if you've got assets that sort of exceed that, and your pensions as part of that, it's now going to be included in those figures.
Oh, it is going to be. Yeah. Some people have put a lot of their wealth into pension, and all of a sudden you're below your 325 actually in your house and your car and whatever, and a bit of cash you at the bank. But as soon as you add that in, then that's going to, and obviously pensions go up in value.
Exactly. Yeah. And people have always gone to pensions because they have been such a tax efficient investment, but.
Yeah, I guess there's also the other thing as well that
take it back out again. Back in the nil limited.
Just pay tax on it.
Yeah. Oh.
I feel like we're just delivering bad news.
This is meant to be people who listen to this before Christmas as well.
Episode spring on.
Yeah. I mean, you have these people that are return guests.
Yeah.
Sorry, Mark.
It's back to Halloween at this rate.
Love that. Good idea, that. So what else? What else
So I
changed?
think that covers off really inheritance tax, doesn't it?
Yeah.
Doing employment tax and capital gains tax. Stamp duty, land tax.
Yeah.
One of my favourites.
Oh, that's right. You love stamp duty. Yeah. So what changed in that one?
Yeah, so another increase again. Surprise, surprise.
Cheers,
so
Mark.
people who've got second properties,
Yeah.
they're now having to pay an extra couple of percent.
Yeah. So if you've already owned a property and you're buying another one to rent out or something, you've always had to pay an additional surcharge.
Yeah.
So that's gone up from 3%, it's gone up to 5%, isn't it?
Yeah.
So on a second property now, I pay my surcharge of 5% plus my standard of 2%. So I now pay 7% on a second property.
That's it. Yeah, if I'm following your maths correctly. Yeah.
Oh, plus 2, 7.
Yeah.
So then on that basis, so the limited companies, I'm probably jumping the gun here, but limited companies used to have the same rule. So effectively to stop people buying a second property in a limited company and paying lower stamp duty.
Yeah.
So they changed that years ago, didn't they? And used to have the same as tax on a limited company as if you would stamp duty land tax, you would on a second property, you would a limited company. So limited companies will also pay 7%.
Yeah.
Yeah. I mean, it's only residential, it's worth noting.
Yeah. Good point. Yeah, no, spot on. Yeah, so in my head, everything's residential.
Yeah. And that came in from the 30th of October as well. So it's another one that was mid-tax year rather than
any sales after that, they're completed after that point.
If the contracts had already exchanged but not completed before the 30th of October, you're still on the old ones. But
Yeah.
Oh, wow. Blimey. So anything you probably get sort of like Christmas time going forward is going to be at the 7%.
Yeah.
Wow. Didn't change for commercial, just for
commercial is still the same. Yeah.
Okay.
And they just confirmed what we already knew, that starting rate was going to be half from 250 to 125 at 0% as well from April. So we already knew that. They just confirmed it was going ahead.
Yeah.
What was that?
So
you see, it's quite technical.
When you buy a residence, say you're going off to buy a house to live in, at the moment, first £250,000 would be at 0%. That's been halved down to 125.
So you start. So not only have you been hit with potentially a higher rate.
Yeah.
On you, is that just on your first home?
That's on in general. How the rates changing.
Right. Okay. Yeah. So you start paying it earlier again.
Yeah. Exactly. Yeah. That's from April 25.
Yeah,
amazing.
It's a bit of time for that one.
As I say, bit of time, but you can't really prepare or do anything about that one. That's just happening.
Yeah.
No forward planning required for that one.
No.
Right. Is there anything else that came up in the budget that springs to your mind? Or
I guess there's a couple of changes for private schools.
Yeah.
So private schools now are going to have to charge VAT on their school fees. So it does mean that they can then claim VAT back on their costs.
Yeah.
So they're going to have to start charging it. So I think the intention is that, or certainly the rumours are that means private school fees are likely to increase in a lot of cases.
Yes, otherwise the schools have got to swallow that increase themselves, haven't they, I guess.
That's it, yeah. And I think it's sort of at the same time as them not getting necessarily the same rates released that they used to as well. So
again, expense.
Yeah, so possibly increase on cost again there as well.
You can tell I've got an interesting question coming up. Right? So, and I know this will be a question. A lot of people listening will ask the question, and I think I know the answer, but I'm going to ask it anyway. So I'm at Neil Limited. Okay, my son is in private school, and they've suddenly put VAT on his school fees. Can I claim that back through Neil Limited?
No, in a way.
Okay. Why?
So when you're recovering VAT, it has to be wholly for the purpose of your business.
Yeah.
So whatever your VATable activity is, so if Neil Limited is providing accountancy services.
Yes, well, I mean, could do.
I guess, I don't know.
It's normally a plumber. So.
I'm probably a plumber.
Yeah, so Neil Limited doing its plumbing.
Yeah.
If you're sending your child to private school, HMRC don't believe that's for the purpose of the plumbing trade. So because it's not wholly for the purpose of,
you can't. So you just have to pay it, and if
they increase the fees because of it, then it's an extra cost to the person paying it.
Oh. Well, I thought I'd ask because I know everybody else will be asking that question.
So. It's a good question.
I think it's one that you hear quite often, isn't it?
It's a no. Oh well, worth an ask.
Yeah. And people were also asking whether they could pay up front now before it comes in. So is it January it comes in that they have to start paying, or is it?
I have to admit, I'd have to.
Yeah.
There's so many different dates that the different parts.
Yeah, but I think there was a period in between it being announced and it actually coming into effect. People were asking if they could pay upfront for fees, but I think it was done on the term. So if it applies to a term that started afterwards, then
you're caught.
Yeah,
because that's what a lot of people would. Oh, I'll just prepay.
Yeah.
Well, unfortunately, no. There's the anti-avoidance legislation to come in for that one. Yeah,
Well, that's it.
Yeah, obviously, yeah. That's what people understand that.
Yeah.
No. What else came out? Mark, any other good news?
I think those are certainly the main ones. There's a few, but I think the one that had previously been announced, then reversed, and has come through is the change in tax status for double cab pickups.
Yeah.
So previously, a lot of double cab pickups would have been commercial vehicles. So for benefit in kind, you can pay a much lower rate on those as a commercial vehicle. And although they announced it and reversed it under the previous governments, it's now been confirmed that they are going to be treated as cars in effect if you do get.
So that's the kind that I go by, like let's just say a Ford Ranger that's got front seats and back seats.
Yeah.
Right. It's been the old rules. I used to go in the rules. I could claim capital allowances, so I could have the whole lot against my profit.
Yeah.
Save tax on it. I could claim the VAT back on it because it was classified as a van. Then, for as you say, for P11D purposes, it was.
So you benefit in kind.
Yeah.
So how much the individual pays tax on it, that's going to jump up exponentially.
Yeah.
So I mean, with that change, it doesn't come in effect till 6th of April next year.
Yeah.
And if you've already bought the van or car,
yeah.
If you've already bought it, or you've already signed a lease to sort of take delivery of it, then you actually get until 6th of April 29, or 5th of April, sorry, April 29. Still classing it as a commercial vehicle, but any new ones bought after that point,
It's a car.
Yeah.
Which again, I think that links back into our agricultural, that sort of things again, where actually the vehicles you've got, but unfortunately, no matter what you're using it for, it's letter of the law. It's a car.
That's
because you've got.
Yeah.
But that's only double cabs. Doesn't affect.
No, so that's double cabs.
Yeah.
Yeah. Okay. Yeah. So I can't just go and check my car for a pickup and go right around and actually, because that's what people are using. But I think that's why they've tried to stop, isn't it? People. Using it for that purpose.
That's it. Whereas a van, you're less likely to use, for the family going on holidays or whatever.
Yeah. It's not quite as glamorous, is it?
No.
Popping down in my van. Okay. So that's that one. What else changed? So pickups has actually done a boomerang on us, hasn't it? Come back.
Yeah.
So yeah. Okay. What else came on?
They've confirmed again, we don't know all the specifics of it yet, but the non-dom status for people who are on UK, sort of base taxpayers, if you like. So people who are non-domiciled in the UK for tax.
Yeah.
Used to be able to leave income outside the UK and not pay UK tax on it in effect.
Yeah.
So again, that's something they're going to do away with. So it's been rumoured for a while. I think previous government had sort of announced plans to try and do it, but again, it's been confirmed in this budget.
So that's if I flew out to Spain. I live in Spain. Right, Neil has now gone. Neil's not here anymore. Neil's moved to Spain. So if I did that, that'll be on anything that I earned.
Yeah, so if Neil was born in Spain, moved to the UK, had income still in Spain, previously you could have elected not to have that tax in the UK, providing the income stayed over there. So if you didn't bring it into the UK, it wouldn't be taxed in the UK. But if Neil is in the UK,
born in the UK, and Neil moved,
it doesn't apply to
Spain. So if Neil, sort of decided I'm here, whatever, I'm up sticking and I'm off straight to Spain. Off I go, and I'll now live over there. Then I then have to still pay tax on my UK income.
Yeah.
Okay. Makes sense. Thanks.
Yeah. But again, that's one where we need the specifics first, which aren't there. So it's
I'm not saying
some horizon, but yeah.
I'm not moving to Spain.
Not that we're trying to get ready for it.
The tax breaks were good,
Yeah.
Okay.
Okay.
Was that
everything? That's
everything.
That's pretty much everything, really. All the main points. Yeah, obviously we've done summaries and everything that we put out on social media. So
blogs.
Yeah, but if anyone wants any more information, just get in touch.
Yeah. So I have another last question. So obviously this one is our last one before Christmas. So have we got any Christmas tips for the new year? Anything that we want to keep an eye on or be prepared for, or anything like that? Or is it just the stuff we've gone through?
Mine would be review your pension contributions. If you're a higher rate taxpayer, especially, just see what pension contribution you made for the year, and if it's got scope, put some more in, because that can be a tax efficient for you.
So that would be, so let's just say I'm a surgeon.
Yeah.
I'm not a surgeon. I've got loads of jobs. I'm very talented. Well, you never know. You've not seen my talent as a surgeon. I'm a knee surgeon, actually. So I'm a knee surgeon, right? And my income is 160,000. Okay. Whether that's right for a surgeon, I have no idea. Let's just say it is. And I've already put in 40,000 into my pension. Okay. So that's got me effectively paying a little bit less tax.
Yeah.
Or saving me a bit of tax, because I'll effectively pay tax in my wage at 40%.
Yeah.
And then I'll end up getting a bit of tax back from that, I assume. That's how it works.
Yeah, so you can put some more into your pension up to £60,000.
That's my next question. Yes. That's why I chose 40.
Yeah. Yeah, you can put another £20,000 in.
Yeah.
What that does is that extends your basic rate band by £20,000. So then you'll pay an extra 20 grand's worth of your income at 20% before the 40% kicks in, before the 45%.
So that means that instead of having 50,000 before I pay 40%, it makes it now up to
70. Yeah, well,
it was my extra 20, but if I put in the full 60,
yeah,
it means I've got to pay effectively 110 of basic rate. So that's really, that could save people an awful lot of money.
Yeah.
See, it's good news. See,
Thanks, Mark.
See, Mark's got Christmas presents. And you can contribute at your company as well, can't you? It's not just...
You can, yeah. The relief can be slightly different if the company's paying it to what you are, but it's still worth making use of your allowances if you've got the scope to.
And I have to make sure that I've contributed that either out of my company or to my pension before the 5th of April, because otherwise it's outside the tax year and I can't think about it. So it's worth thinking about, actually. We've got effectively 3 months before then to actually put those contributions in.
Yeah.
Amazing.
Good news.
It's not that bad, is it? It's not that bad. But I don't think I've got any other Christmas tip. Well, I haven't got a Christmas tip. Mark has. I don't think we've got any real Christmas tips. I think pensions is the way. But obviously it might affect inheritance tax.
Exactly, yeah.
So it affects one, doesn't affect the other. One of those, isn't it? But you can't actually, it's one thing you do could affect another tax. So they're not all going to benefit every single tax, but depends on which one we want to benefit.
I think the main thing is, if you're planning to do something like that, is to get in contact and ask the advice, isn't it? Because at least then you know what the different effects are.
But I'm not forward planning, get the advice when you need it, and that's absolutely perfect. I couldn't finish that on a better note, I don't think. Perfect. Thank you, Mark.
Yeah, no worries.
Really nice having you on. We might not have you. We might have you back at Halloween then. Yeah. So I think that covers everything. So last thing to say from me is, I hope you have a lovely Christmas. And can't wait to see you in the new year.
Yeah. Merry Christmas, everyone. Thanks for joining us.
Thank you.
Cheers.